Is the crypto bottom in? On-chain says yes, macro says pain occurs after the Fed pause. The collapse of Terra, Luna, in June 2022 triggered a chain reaction that saw the market reach its 3-year low, with Bitcoin dropping to $15,500. Since then, the market has recovered and is currently hovering around $23,000. However, with bankruptcy proceedings still ongoing for prominent industry players and a looming recession creating macro uncertainty, the market remains unstable and further volatility is possible. Whale addresses, which hold more than 1,000 BTC, have historically accumulated Bitcoin during extreme price volatility. These addresses began to accumulate heavily after the Terra collapse in June 2022 and the FTX collapse in November 2022. However, in December, whales began to sell off their holdings and their net positions decreased. There has been some increase in whales' net positions at the end of January, but exchange volumes do not suggest massive accumulation. This suggests that a strong cycle bottom has been reached. Long-term holders of Bitcoin are seen as an indicator of market cycles. Generally, when their supply increases rapidly, the market tends to bottom. In November 2022, there was an exception to this trend when the collapse of FTX caused many LTHs to decrease their holdings. Despite this, the LTH supply has recovered in 2023 and they now hold roughly 75% of Bitcoin's supply. Analysis of Glassnode data has also shown that the LTH supply continues to increase, suggesting that the market could be nearing its bottom. Perpetual futures are futures contracts with no expiration dates, which are used to gauge investor confidence in Bitcoin. Positive funding rates indicate more long positions in perpetual futures contracts, showing investors anticipate an increase in Bitcoin's price. Negative rates show an abundance of short positions and the market gearing up for a decrease in Bitcoin's price. In 2021 and 2022, sharp spikes in negative rates have always correlated with the market bottom, indicating investor confidence in Bitcoin was waning. However, in 2023, funding rates have been almost entirely positive, suggesting the market could be in a recovery phase. The repetitive nature of market cycles enables us to recognize patterns in Bitcoin's price volatility. Since 2012, every bear market saw Bitcoin post a higher low than in the previous cycle. These lows are measured by calculating the drawdown from the all-time high price BTC reached in the cycle. In 2012 to 93% drawdown from all-time high, 2015 to 85% drawdown from all-time high, 2019 to 84% drawdown from all-time high, 2022 to 77% drawdown from all-time high. Higher lows each cycle lead to the total supply of Bitcoin in profit getting higher. This is also due to lost coins as this number continues to grow each cycle, essentially becoming a forced hold. Every time the percent of Bitcoin supply in profit dropped below 50%, a bottom of the cycle was formed. This happened in November 2022, when the supply in profit was as low as 45%. Since then, the supply in profit increased to around 72%, indicating market recovery. These metrics suggest that the bottom was reached in November with Bitcoin's drop to $15,500. Net unrealized profit, loss, NUPL, a metric comparing the market value and realized value for Bitcoin, is a good gauge of investor sentiment. Entity-adjusted NUP currently shows that Bitcoin is out of the capitulation phase and has entered a hope, fear phase, which has historically been a precursor to price growth. Since its November drop, Bitcoin has reclaimed multiple cost basis. Each time BTC's spot price surpassed the realized price, the market began recovering. As of February 2023, Bitcoin has surpassed the realized price for short-term holders, $18,900, the realized price for long-term holders, $22,300, and the average realized price, $19,777. The MVRV ratio is a metric used to measure network valuation through its realized cap. Unlike market cap, realized cap approximates the value paid for all coins the last time they were moved. The MVRV ratio can be applied to coins belonging to long-term holders and short-term holders to provide a better picture of how hodlers behave. When the long-term holders' MVRV ratio drops below the short-term holders' MVRV ratio, the market forms a bottom. Data from Glassnode shows the two bands converge in November. Every time the ratios diverged, the market entered a recovery phase that led to a bull run. The Fed is pausing interest rate hikes. Graph showing the correlation between the Federal Reserve's interest rate hikes and the price of gold from 1998 to 2023. Since 1998, the top of the Federal Reserve's rate hiking schedule correlated with the bottom in gold prices. The chart below marks the bottoms with black arrows. Each of these bottoms was followed by an increase in the price of gold. After a drop to $400 per ounce in 2005, gold rose to $1,920 per ounce in just over 6 years. While Bitcoin has long been compared to gold, it wasn't until 2022 that they began showing a significant correlation. As of February, the price of Bitcoin and gold has shown an 83% correlation. The US dollar has been weakening over the past 100 years, and attempts to control the money supply were abandoned during the COVID-19 pandemic when the Federal Reserve began a massive money printing initiative. This has caused unprecedented volatility across other fiat currency markets, making it difficult to determine the bottom of Bitcoin's price. This instability has been seen before, notably during World War I, when the Weimar Republic's papier-mark became worthless and caused significant volatility in the price of gold. While the overall price of gold increased from 1917 to 1923, it experienced a range of monthly fluctuations in papier-mark terms, sometimes increasing by as much as 150% and dropping as much as 40%. And while the US and other large economies are far from this type of hyperinflation, the volatility in fiat currencies could have the same effect on the price of Bitcoin.